Welcome back to Morning Knowledge. Today we are going to look at what we call the tax cylinder. So one of the things that I know when I talk to people, just like you, when they visit with us, is I find that about half the time people understand how taxes work really well, but half the time they're not super clear. So I think this would be a great opportunity for us to help gain some clarity on how the current tax code is structured. Now, by the way, just so you know, this is the best tax code that I think we've ever been in during my lifetime anyways. Probably ever since it started back in, I think, 1913 or something like that. Anyway, here's how it works. Now, I have a column titled Married. These are the married numbers, and then a column titled for single. So the tax code is structured by adding up all of your income. Now, there's a certain portion of your income that is actually, believe it or not, tax-free. And for married couples, like I'm married to my wife Tony, the first $24,000 that we earn is actually tax-free because we get a $24,000 standard deduction. For a single person, it's $12,000. Now, by the way, heads up, all these numbers are kind of rounded off. I think it's $24,800 for married and it's $12,400 for single. So these are rounded off figures. Please forgive me if they're not, perfect. But they're really close. So the first 24,000, or if you're single, the first 12,000, no tax. It's zero. That's a good number. We like that number. Well, then for any money that we have in taxable income between, again, I'm married, so between 24 and 45,000, so there's about a $21,000 zone there for money in those two categories. It's 10% tax. Now, here is something that people miss all the time. They say, well, gosh, Derek, you're at zero if you're below 24,000 as a married couple. Well, if you make over that 25,000, you bump up to the 10% tax bracket. Yes, that is true, but here's the mistake. They think, well, that 10% applies not only to the amount above 24,000, but it also applies to the first 24,000. No, it does not. So here's what I mean. Let's say that my wife Tony and I make $25,000. How much tax would we owe? Well, the first $24,000 would be zero. We only pay this extra tax on that extra $1,000. So we would pay 10% on the $1,000 owing $100 of tax. That's not a big number. The reality is that as we work our way up, we are gradually paying a higher percentage on the higher amounts of income. So I'm married. Let's go down the married loop here. We start at 24, the first 24,000, no tax. The next roughly 21,000, we pay 10% tax. So the next almost 60,000, we're paying 12% now. This is what I want you to pay attention to. A married couple, if you're making $100,000 or less as a married couple, and a lot of folks who are retired are in that zone, you're paying 0% on some of your money, 10% on some of your money, 12% on some of your money. Bottom line is, when you figure it all out, you're not paying very much tax. You're paying single-digit tax on average. Now, for a single person, look at the numbers and how different they are. The first 12,000, no tax. The next roughly 11,000, 10% tax. The next 30,000, 12% for a single person. You can make about 53,000 and be in the same tax brackets as a married couple of 100,000. Single people, you guys, I feel bad for you. You've got some of the toughest rates out there. Married couples, some of the best tax rates out there. And as we keep going, and notice these are green because these are good, right? But we keep going. Look at this. For a married couple, from 105 to 196, what is that? Almost 90,000. The next 90,000 now, you're paying about 22%. And then all the way up to 351, you're paying 24%. I got to share this with you. At no time in the entire tax code have you been able to make so much money and pay so little tax. Now, for a lot of you, you know what this really spells. This spells out Roth conversion opportunity. That's what it spells out. You really should be paying attention to that. A single person, the higher tax brackets, 98 to 176, well, what if you make higher than those numbers? Then you officially hit the percentage that I like to call the percentage, right? This is where you're paying north of 30. This is the 32 to 37%. This is where you're paying percentages in the 30s, and thank goodness we live in Tennessee. There's no state income tax. Can you imagine adding on a bunch of state income if you lived in California or New York? So this is how the tax cylinder works. It's a graduated system. You pay almost nothing or very little percentage on the first amounts of income that you have, and as your income gets higher, you work on your way up. All right, so that's how the tax code works. I hope you find this helpful and somewhat educational, and now you can amaze all of your friends the next time in your next gathering. So we've got a lot of great stuff coming up, and if you have questions or want to review, click the link below, schedule a 15-minute call with our team, and until then, be safe and be well.